All right, all right, all right. Good morning, everybody. Hope you guys are having a great day. It is Tuesday morning. We're going to go ahead and get rolling. All right, all right, all right. With our live session today, we're doing something a little bit different today. Doing a bit of a simulcast. So I got some of you here on YouTube. Pardon me while I'm looking at multiple screens at one time. All right, so let's go ahead and get going today. We are about to get rolling on our simulcast on our session. So one of the things that I wanted to do today was cover a couple of things. So today is a session where we focus on strategic traders, really designed to talk about some of the basic things that we do. And so today on that strategic trader piece, one of the things that I wanted to work on was what are some of the fundamental things that we can do from an entry standpoint. When we talk about entry standpoint, what we're looking at is how do we create good entries and what are the things that we set up for. So I know the strategic trader is supposed to be a little bit slower. I figured that today we would take it back to some of the basics. We've had a lot of new members that have joined in the last few weeks. So super excited that we've had some new members that have come on board, but we've also had some members that as they've come on board, they're like, whoa, what does this line mean? And why do we have this entry? So I figured that today we would really talk about our three types of entries. And the three types of entries that we want to focus on primarily are going to be the candle to candle entry, the confirmation entry, and then the limit entry, and how and when and why we would use each one. And then I want to look at some individual stock positions as to why we would do those different entries. And primarily because those entries are going to all they all have their advantages and disadvantages, right? So I figured that's what we would start with today. So I'm just going to I'm going to pull up a stock chart real quick and just use this stock chart as the one to give the very quick overview. And then we'll come back and we'll look at some individual trades on what that overview would be. So three types of entries. And when I'm talking about my three types of entries, the three types that I look at, the first one is a confirmation entry, right? And this is entry as soon as price reaches level. Okay, so our confirmation entry is going to be entry as soon as price hits a level. The second level that we're going to pay attention to is going to be excuse me, I wrote that as confirmation and that was incorrect. That's our limit entry. Limit entry is as soon as price hits a level. Confirmation entry is entry as price leaves a level after a 50% penetration. That I think is the one that is the hardest for people to kind of wrap their heads around. And then candle to candle is primarily one that I'll use for smaller or for larger time frame, more swing trading. And this is going to be looking for higher highs / lower lows to enter. So when I look at these three entry criterias and these three entry types, which one is the highest probability? Which is the one that I would take with highest probability trades? Which is the one that we're taking with the highest probability trades? That's going to be my limit entries, right? We're going to do our limit entries with the highest probability trades, the ones that we just think can't, I say can't miss, but the ones that have the least probability of missing in a position. And so what I'm going to do right now is I'm going to just wrap my lines around a very, very easy to see area to kind of talk about these. So if I were to do a limit entry on a position like this, what I'm essentially saying is that my belief is that price is going to drop into this region, right? So in that case, my belief would be that in some way price is going to drop into this region. And as it drops into this region, my entry is going to be as soon as we touch the top of this level, okay? Now, that's a limit entry. My entry is going to be as soon as price touches the top of the level. Now, the advantage of that limit entry is that I'm going to get into the position way earlier, right? I get into the position way earlier. And when I get into the position way earlier, I'm getting in before a lot of other people are buying in. And the advantage is I'm getting in way earlier than everybody else. And so I get a chance to almost, I'm going to use the term front run a lot of people, and I'm not front run illegally, but I'm getting in front of their buy orders, because my belief is that somewhere down in here is that I have more buyers than sellers, but I want to get my buy order in place before they get their buy order in place. And so in a limit entry, what I'm looking for is my buy order to enter the position before their buy order. So that would be my first entry. Now, the way that I show limit entries is that I use a solid line. That's how I know, okay, this is probably a limit entry where I would want to get into that position. I will tell you, I primarily use limit entries only when day trading on small time frames. I don't really use limit entries when swing trading all that often. I normally use limit entries when day trading on smaller time frames. Those are going to be the better opportunities for limit entries. So the second entry type is confirmation. And the way that I illustrate that something is a confirmation entry is that I put the lines with dashes. That reminds me that it's a confirmation entry. And so when I have a confirmation entry, what I need is for price to touch 50% of the way into the level. Now, upon touching 50% of the way into the level, that is going to activate the trade. So my belief is that in this one, this is where this is going to activate that trade. The level is not active until we've hit 50% of the way into this. Now, when that occurs, what that means is that if price does something like this, where we hit this level and then we shoot up out of that trade, I never get into that. And the risk is that I miss some of those trades, right? But let's say that we do come deeper into that level and we come into it like this. Now the trade is active, but I'm still not in the position. So when I'm using confirmation entries, one entry or one level is going to be designed to activate the trade. The second level is the entry price. So the entry is still going to be right here. And the entry is going to be as we exit the zone, right? So we're not going to be interested in entering that position until we actually exit that level. And if price looks something like this, where what if we do something like this? Now we've got an entry. Now, downside to this. First of all, the downside is, especially when swing trading, is more than once I've had this happen where the next day we gap up and we go like this. In that case, I don't get in the trade, right? Because I don't want to get in somewhere up here. I want to get in somewhere down in here. So the risks on this one is, A, I can miss the trade. I may not get my order filled at all. Okay. I may not get my order filled at all. I might completely miss the position. The other downside is that even if I do get my order filled, oops, I can't bring those back on. Even if I do get my order filled, that order that I get filled might not be filled at the price I want because it could be moving very, very quickly. This is where liquidity is going to matter. Now, other thing is what happens if I get a candle like this and then another one like this, and then we come shooting down out of that level. Well, in this case, did I ever get filled in the trade? No, never got filled, right? In this case, I never got filled in the position because we didn't come back up above my entry criteria. And when I'm dealing with trades that have a slightly lower probability, that's why I like this particular method for entry. It's because it allows me to still engage in these positions. It still allows me to engage in these positions, but I can maybe get in at a little bit more comfortable price point, something that's not going to, I've got usually a better entry and a better opportunity. I like these a lot better when I'm swing trading. Lower probability day trades and swing trading, I like these a lot better. And so those are kind of my main primary entries. The third entry is the candle to candle entry type. Now, the candle to candle entry type is going to be a bit different because in the candle to candle entry type, I've identified a level. And before I identify the level, and typically what I do with this is I will actually mark this on the chart with a text box that just tells me that this is a candle to candle entry. And what I'll be looking for is some sort of a candlestick reversal pattern as we come into the level, right? So let's say that we start to head down and we come into the level. Something like this, and maybe we don't come crashing down into the level like I illustrated before, right? Maybe we have a slightly less aggressive entry into the zone, and maybe there's even some basing in front of the level, right? And so as price comes into the level, it's a bit less aggressive. And we start to make our way into the level, and then all of a sudden we're in the level. Now, but I like the zone, but when I do this, what's my clearly defined trend direction as we do this, right? No question, I'm clearly defined downtrend, right? So this would be a counter trend trade and a counter trend position. So that's number one. Number two is that I'm based in front of the level, which lowers the probability even more. But if I really like the level and I think there's a chance at a reversal, what I'm going to start to look for here is some sort of a candlestick reversal pattern, right? So maybe somewhere down in here, we get something like a doji, right? Maybe somewhere down in here, we get a doji, or we get a couple of candlesticks that give me some long lower wicks as we approach a demand area, telling me, okay, that there is some buying that's going on and some buying opportunity. Well, in that case, now I'm using the zone. I'm still using the zone, but now what I'm really using, what I'm really using is, again, the fact that I have, I gotta remove my charts back up. There we go. What I'm really using is the fact that I've got a reversal candlestick pattern at that level, my entry is going to be based upon simply that last candlestick that was formed. So the last candlestick that was formed, which in this case is going to be the doji, that's going to dictate my entry. And in this case, my entry would be when I get higher than this daily candlestick's high. Now, my stop is going to be when I get lower than this daily candlestick's low. So essentially my risk when I go candle to candle is the width of my reversal candlestick. And I'm relying on the reversal candlestick to give me the entry. Okay. So the reversal candlestick pattern is what I'm going to look for the entry when I get into here. When swing trading, I primarily will use candle to candle style of trading. It is by far my preferred method for swing trading because it keeps me out of trades that I don't necessarily think I should be getting into. It keeps me out of positions that start to go against me in many, many instances, but it gets me into a lot of really good setups when I'm looking at reversal styles. Okay. Oh, thanks, Doug. I'm going to pull that one up. Let's pull that one up. So for those of you that can't see, I got a chat that says taking a look at NEE, N-E-E. And let's talk through some entry charts. And I figured today would be a good day to look at some trades if y'all have something particular that you want to. It's a great example. Yeah. So when I come back in this, lots of demand back here with these lower wicks to the left, lower wicks to the left. And so certainly this demand back here exists. Now we've hit off this a couple of times, showing that it's got a bit of weakness. But as we came down, crashing down into that level, this is a great example. Look at this. We had a bit of a reversal candlestick pattern right here, which gave us a potential entry. Now we've not really gone anywhere since then. So what kicks in? Let's say that I did decide to take it on this reversal candlestick pattern where we had a bit of a spinning top candle. Once I get into the trade, how many candlesticks do I give myself for it to start moving in my direction? Right? Then my 6 candle rule comes into play. And if it's not moved my way in 6 candles, it's probably not going to move my direction anyway. And so this is a good example of one that doesn't have the, it's coming down, it's counter trend. You can still get in. And even if I do get in, my risk is limited to the width of this one candlestick. So now I'd be 1, 2, 3, 4 candlesticks into it. Now, if you say, well, I'm just looking at it today, and by the way, you will see candlestick patterns all over the place because you might say, well, Chuck, that one was a spinning top, but this is a bearish harami, right? Because we do have a bearish harami there. Oh, wait a minute. That bearish harami tells me that we'll probably break to the downside, which we very well might, continuing in that overall trend direction. I like the fact that we could go candle to candle on something like this. So that's a really good one to talk about. The one that I was looking at was actually Microsoft. And the reason I thought about doing this today was because we had looked at Microsoft last week, actually. And we had looked at Microsoft on this day right here. So last week on 8/8, we looked at Microsoft, and I had Microsoft on my list as looking to buy the 330 by 310 bull call spread based upon this candlestick. Now remember, last week when we looked at it, last week when looking at this Microsoft chart, that was our candlestick. And we were sitting at not a great level of support, but a decent level of support where old resistance acts as new support. We're sitting at a support line with a reversal candlestick pattern. So this was the trade that I looked at yesterday or last week and said, okay, that's a pretty decent entry. So if you evaluate that and say I've got a pretty decent entry, your entry is above that candlestick's high, your stop goes below that candlestick's low. The very next day, candlestick did not get above the high. We actually broke below the low. Okay, trade's dead to me at this point. We've not necessarily been stopped out of the trade, but the trade went in a direction that told us we probably don't want to be in this thing anyway. And so by doing that, that said, hey, listen, probably not interested in it. The next couple of days, we still haven't gotten back above that 328.94 area to give us any sort of an entry. So now where's the next best entry in Microsoft? Well, now we've got to look at the gap fill area right here. And that's a perfectly good level to look for a reversal in what, has been for the last few months, a strong bullish stock. Now, looking at it on the weekly chart, I don't like it near as much. When I look at the weekly chart, I want to go a bit lower, which then corresponds with this sideways price action through here. It's not quite as pretty as it is on the daily, which is why you'd want to do the candle to candle style when looking at something like this. Now, that's a fairly strong bullish example. What about a bearish example? Well, for a bearish example, let's look at Disney. Okay. Now in Disney, I was looking for a potential breakdown below 85.15. Unfortunately, never got it. Small move just above. But I was looking now, let's say I'm looking now at this area of supply over here to the left. Same rules would apply, especially in this case, because I would be following what has been a pretty strong downward trend. If we were to come back up into that region for a potential reversal candlestick pattern. So those are some examples of things that I think are good potential trade entry styles for both for limit entries, confirmation entries, and candle to candle style. Right now, let's go to smaller time frame real quick and let's look at what we have for today. See if there's any quality limit entry positions. And when I look at, well, here's a good example of a confirmation entry, right? So here was our found on a 15-minute chart, right? Rally base, very strong drop, came screaming into the level, more than 50%, got a very nice move away. Hit it a second time and didn't get quite as big of a move away, which weakens that zone. And so that level was very effective the first time through. Now, looking at this on a bigger picture time period, my 4-hour chart, still chopping along. We've come down the last couple of candlesticks after a rally up on Sunday evening. What are we looking at the moment? Well, I think that if we would continue to see the trend follow through, I love this area right here for a potential reversal, 44.83 by 44.89. Now, why do I like that area? A little bit of a rally base drop with a candle over candle point just above us, where I think we could see a little bit of a reversal. I think that's okay for a limit entry. Is it following the overall trend direction? Yeah, but we're seeing a little bit of support being formed, right? A little bit of bullish momentum, if you will. So a little bit of support is being formed. So while I think that that's still a pretty good short, I wouldn't be shocked and awed to see us break through there. And so I wouldn't enter that right at market open. I'd probably wait a little bit after market open for an entry, or get in before market open and see if the open moves us down from that zone. We looked at the NQ the other day. The NQ, we traded into this quality level from Sunday evening, got a really strong move away, hit it a second time, blew through it. And so the NQ on a 4-hour gave us a stronger rally than we've seen throughout this big downtrend, but I think still overall remains a bit in the downtrend side of things. So when I'm looking at the NQ for a position for today, same, basically the same setup as we have in the S&P with this little tiny wick over wick level, 15,204 by 15,223, I think is the one that exists and is the best one for today. So those are kind of the two, looking at limit entry opportunities that make the most sense. All right. Questions on entry types. Everybody good with that? Makes sense. I know there's a couple of people that are fairly new that may not have seen that. For most of us, it's probably a review. But I thought it was good to kind of take a little bit of time today and kind of go over that as a strong potential opportunity. All right. So scanning opportunities for this week, and I do want to give everybody a quick heads up. I want to. Today's a holy day of obligation, so I'm running to mass this morning at 8. That starts at 8:15. So I'm going to head off a little bit early today, and we're going to wrap up in about 15 minutes or so, if that's all right with everybody. And if you guys have anything you want to take a look at, let me know. But I want to wrap up a little bit early today. I want to make sure I make it to mass at 8:15. So, all right. So I want to do a quick scan, and when I'm looking at my major markets, I'm starting with the S&P. The S&P on a daily chart we are sitting just above a 50-period moving average, and we put in a bit of a reversal candlestick yesterday at the 50-period moving average in the SPX. So the SPX is sitting just above the 50-period moving average. We are technically in the bull area. So the bull area is below the 20, above the 50, and above the 200. So this, I think, is a really good opportunity to go search for stocks that are also in the bull area that might give us a decent entry. So when I go to my scan, my stock hacker, and I'm going to go to my bull area stocks. So my bull area stocks are going to be over $15 a share, the 50-period simple moving average greater than 800,000, below the 20, above the 50, above the 200, and then the 20 is above the 50, which is above the 200. We're going to get a fair amount of stocks here. All right. 140 stocks fit that criteria this time around. So when I look at them like this, I can sort them by market cap. Market cap's probably the easiest way to sort those. And let me do this real quick. I don't think I have market cap on this one. I like sorting my market cap because it's going to have a lot to do with the liquidity. Okay. So let's just take a quick look through some of these. Now, NVIDIA had been on our list before. NVIDIA was a good example of one that was on our list that, gave us that candlestick reversal pattern, which didn't work out the best way. Now, NVIDIA, if I look at this one relative to the rest, it's already dropped below the 50. It happens to be back above the 50. We've already dropped below it. And so it doesn't quite fit the pattern the way that I would like to see it and the way I'd look at it. Meta does. So when I look at Meta's sitting really pretty in my bull area with a candlestick reversal pattern that has just completed from yesterday. What's my candlestick reversal pattern? Well, we've got a bullish engulfing pattern right here. After a pullback below the 20, above the 50, a full bullish engulfing candle closing on the high yesterday. So yesterday we closed on the high. Does that mean that we're going to come rocketing up? Not necessarily. Matter of fact, this morning it looks like we're going to open up somewhere between 304.13 by 304.78. But Meta is right on the list of a potential candle to candle entry. We've got a gap fill, right? We're sitting at a gap fill area, right, from our earnings gap fill area in the bull zone with a bullish engulfing candle. Now, we are coming off this area of supply, but if we think about this area of supply that exists over here to the left, which we've hit and we've gotten a little bit of a move away, the better areas in Meta are way the hell down here, but I don't know when we're getting back down to that level, right? I don't know when we're going to get back down to that level. And what stinks is when you see a big move in Meta up to here and you say, well, the better level is going to be down here, and then it shoots up another $100 a share because you didn't get in, right? And so now with yesterday's engulfing pattern, if I just use the actual engulfing candlestick, if we come back up above yesterday's high, which was 306.21 technically, let's do this. There you go. All right, so we come back up above yesterday's high, a stop just below the low. What would be the trade that we would set up? Well, let's load this up. TAIV range. We're not in a great spot to do just a long call, so we would look for the bull call spread. And the bull call spread on something like this, let's go out to October. So the 300 is a delta of 60. The 330 has a delta of 34. So the 300 by 330 gives me my 25 net delta, and I'm coming in with a debit of less than 50% of the spread. That would work, is because remember my two rules are delta of with a delta of at least 25. In this case, our delta is 25.45. Remember, it's the 60 that we are long minus the 34 that we're short. And then my debit is 1335, which is less than 50% of my overall spread. Those are the three things that I look at. And so this one would be very effective. I think it would work just fine. My stop in this case would be below 298.23. So let's just call it 298. So stop at 298. Target. Well, let's put the first target at 326, but I think we could certainly get higher than that, because if this is a true impulsive move up, we should get way above 326. So let's look at 326 and then just 340. Actually, I've got enough data that I can go back. 340 is actually a good number. Okay, so 326 and 340. So looking at this from a risk perspective, let's say we are in this position for 25 days. So 25 days into that position, your exposure looks to be around 75 bucks in this position. Your reward at target 1 would be 574. And at target 2, you're looking at 919. Now, that can't be right. There's just no possible way that's right. It's not right. That's at 305, not 298. I didn't think that was right. Hold on a minute. It's like, that does not seem even possible. That's better. A risk at about 280 against a reward of about 568. So yeah, that seemed to, my line wasn't in the right place. So you've got about a 2-to-1 reward to risk in that case, with a stop at 298 and a target at like 326. So I think that's a pretty viable setup, and I kind of like that one. So Meta looks pretty good. I like it. You know, I'm really close to my maximum debit here, and my delta's sitting right at 25. You could actually widen it out a little bit and get a better delta and probably a better debit relative to the spread. So if you're willing to take a little bit more risk as far as nominal risk, 381, your reward goes up a bit, and I think you might do a bit better off. So I think Meta works out pretty well, but obviously it's going to change when we open up later today. I'm going to share this list. Oh wait, everybody has it. All right, I posted this in the chat, so if anybody wants it, you can have the bull area list that we found today, because certainly we're not going to have enough time to go through everything that's in this list. But I'm going to do a real quick speed dating. Ooh, JP Morgan Chase looks pretty good, but oh, that's a weekly chart. Hold on. Doesn't look bad. JP Morgan Chase looks pretty good. Adobe, let me throw my moving averages back in. I do like to see it relative to the 50 and the 20. Baba's out. That's just sideways. Lowe's is no good. IBM is no good. AMAT now. So Lamb looks pretty interesting. Not the best. All right, this is a good example of, look at the deep pullback we've gotten through here, right? Sitting at right above a decent area of demand. And yesterday's candle was an excellent reversal candlestick, right? That's an excellent reversal candlestick. Really nice one here. Is it in a great level? No. I would be interested if we have increased volume yesterday. Slightly higher than average volume. So if we were to get a move above the high here, I think that one may be worth considering. I've not looked at the options on this one. It is in no man's land. No doubt it's in no man's land. What I'm looking at, Liz, is kind of this support line here and wondering, is there going to be people that jump in a little bit early? And I would not get into it in any way unless you get a higher high, right? But I do, like, from a pure chart perspective, it's not the worst thing out there. Activision Blizzard, that thing been bought yet? Looks like it's got to get bought. You know, for all the stocks that are on the list, there's not a whole lot that are sticking out to me. So as I just kind of shoot down this list, I'm not finding a whole lot of things that excite me. Frankly, JP Morgan Chase is looking better and better because there is not a whole lot. And now I'm starting to get into the much smaller market cap that's going to have lower options liquidity. Yeah. So nothing else in here that I'm going to really spend some time on. So BX was pretty good. Meta was pretty good. But there's not a whole lot. There's not a whole lot. So I think VX and Meta were both pretty good. So Andrew, great question. On candle to candle, do you move your stop up after the entry? I want to move, so I can move my stop up and literally move it up underneath each individual candle if I want to. I think that sometimes is going to be a little bit too aggressive. I like having the 6 candle rule in place and then moving that stop after that 6th candle has started to go that direction. So, all right. Well, with that being said, I'm going to pop off. Like I said, a few minutes early. We're going to mass this morning, and then I've got a bunch of errands that I'm doing all day today. I'd only move a candle if it creates a new higher low, right? It's got to create a higher low for me to be willing to move that candle, and that has been pretty effective. When you get a runner, it allows you to really follow a runner if I'm moving that stop underneath each candle as I get a new higher low. When I get a new higher low, especially when I get a new higher high, that's what does it. All right, have a great